good afternoon. You've tuned into Mutual Fund Corner on CNBC-TV18. I'm Vinny Motiwala. Thank you so much for tuning in. And today what we're going to be discussing is all the queries that you all have sent us related to mutual funds. What mutual funds should you all be looking at? Is it the right time to pick up mid, small cap funds? You have sent out a whole host of queries. To answer all of that, we have Nasser Salim, Managing Director at Flexi Capital, joining in with us. Nasser, thank you so much for joining in with us as always. It's always a pleasure having you and listening to your views. Today we're going to be just discussing queries. We have a whole host of them, so I'm going to get started quickly with them. We have the first query. This is coming in from Dev Chikara, who's writing to us from Nagpur. Now, he's saying that he's looking to invest a lump sum amount of 1 crore rupees in a staggered way in a Kotak debt hybrid fund, Quant multi-asset fund, Kotak equity options, as well as Tata small cap fund is what they're looking at. And he's asking that, what should he be doing now? He has an investment horizon of 4 to 7 years. Whether he should continue with this mix that he's holding on to, is it the right mix that he has right now, or any changes that you would be recommended?
Good afternoon. Thank you very much for having me back on your show. It's always a pleasure to be with all of you. A quick one, he's obviously been investing and one of the few things that when I hear this question is keeping in mind the investment horizon and fund selection. We assume that it is an aggressive risk profile because that is paramount to the entire discussion. And the suggested split to him, in my opinion, would be shortlisted options of 80% in equity as an asset class and 20% in fixed income. And a staggering lump sum could help smooth market timing, especially given where we are today in terms of market volatility, capturing uncorrelated exposures. I think a longer time horizon will also allow better deployment and better opportunities for an exit down the line. Broadly, we feel that a split between, and in the equity basket, 70% core and a 30% thematic should that flavor should do well for him. A combination of large, flexi, as far as flexi cap is concerned, in terms of large cap, in terms of core. And in the satellite, we would want him to add a little bit of consumption in banking and financial services. Also, because we all know very well that given where we are in terms of the announcements in the recent budget, that may bode well. And add a little bit of gold and silver as well, which should be able to navigate him to his end objectives. However, the appropriateness of these categories depends on his risk tolerance and liquidity needs.
Okay. So interesting set coming in there, and allocation-wise also, Nasser has given those list of names that you could look as well, and you saw it in the graphics also playing there as well. Let's move on to the next query for today. We have Munira Julu Pullur, who's writing to us from from Tamil Nadu, and he's saying that he's done some monthly SIPs of 1,000 rupees. One is in SBI Blue Chip Fund, Tata Digital India Fund, as well as SBI Small Cap Fund, a regular plan growth. For the last 3 years is what he's been doing in terms of SIPs. Wants to know whether he should continue for the long term with this, or any changes that is recommended on this one. Your view on this, what is the suggestion that you have for this one?
So again, clearly, when we look at these kind of allocations, I think one of the few points that we keep talking to all the prospective investors is please have a clear discussion with your certified professionals on the way forward on core and satellite. I think those are very important in today's times, especially where we are in the markets. We assume again that this investor is an aggressive risk profile. Continuing SIPs in these funds, especially more volatile categories like thematic and small cap, can help benefit from rupee cost of averaging, and therefore, depending on the over long-term horizon, you can continue. There is a lot of comfort today from our perspective, not recommended in shortlisted options in large caps, relative to small and mid caps is what we feel, and therefore, one of the few things that we wish to add at least is please allocate some options available in the large cap category between Nippon and ICICI. We also feel that there could be some addition in Flexi Cap, which is not there in the portfolio. And in the satellite, again, a little bit of consumption in banking and financial services. We've shortlisted those options, between the ICICI, SBI, and Nippon, and a few other like Sundaram. I think a combination of these broadly will suit more favorably over the next few years. Yeah.
Okay, surely again a list of names and interesting names coming in there from Nasser as well, and what you should be doing there. Let's move on to the third query for today. We have Lakshman, who's writing to us from Hyderabad. Now he's saying, although he has a SIP of 60,000 rupees, and this has been for at least 5 years in Motilal Oswal Mid Cap Fund as well as SBI Blue Chip Fund. Again, that name is coming up as well, Nasser. Wants to know the outlook for the long term, what should they be doing right now? I think, everyone's worried, Nasser, given that, some of these mid and small cap have started giving those negative return because of the recent corrections that we've seen. So I think that worry is coming in on this front. But what would your suggestion be? Motilal Oswal Mid Cap Fund and SBI Blue Chip Fund, 60,000 rupees, I think, is what he said that he's investing right now through SIPs.
So very clearly, I think, to your point on mid caps, I think specifically for the example that we've just mentioned on the fund, Motilal Mid Cap has been outperforming its benchmark on multiple time horizons, which is definitely available on data. The fund has corrected 20% from its top. However, this should not affect SIP investors with a long-term view. Our view on SIPs, it should not be stopped. It should continue to go because it's a long-term question of wealth. SBI Blue Chip has recently, he's already been investing in SBI Blue Chip again. It's a good story there. I don't think there is anything much to worry on. Additional details regarding risk tolerance and financial objectives should be refined and defined by him on his outlook. Our view is that he can continue with these two. There is no need to stop in SIPs in any of these categories. Large and mid cap is long-term intact. A monthly SIP of 60,000, approximately 5 years of a kind of a time horizon. The expected return in equity historically has always been close to about 12%. That's what we should go with an estimate. The invested amount should be roughly about 36 odd lakhs in terms of cost of capital. Total value, which means after 60 months from now, the value should at about 12%, roughly should be about 48.66 lakhs. So an increment of about 12.7 lakhs over a period of 5 years, augurs well. So clearly, the view is not to stop SIPs in those two.
Okay, let's move on to the next query then for today, and this one is coming in from Prakash. Prakash is writing to us from Chennai. He's saying that he's invested 50,000 rupees per annum in NPS last year, but it is not continuing. He's not continuing with that investment as there is no tax benefit that he's seeing, significant one there. So he says that his other investments include 15,000 rupees per month investment in the Old Provident Fund and 12,000 rupees per month investment in superannuation savings with LIC. So wants to know whether this is a good investment strategy for a retirement purpose.
Okay. So very clearly, I think the current mix across NPS, Provident Fund, and the superannuation plan that is being shared by him represents a diversified retirement strategy. I think that's it seems to be in the right set of or the category of basket. We assume that he's a conservative risk profile investor, primary objective being a retirement corpus here. A review of asset allocation considering factors such as inflation and expected retirement and his age might be warranted as of now. So it will be beneficial to kind of assess, the retirement income needs and other financial commitments before making any changes. Our suggestion on some of the shortlisted funds clearly is that there could be some addition in arbitrage as a category. That is something which, will augur well for him. There is a new category post the budget that came in last year, which gives you long-term capital gain benefits of if you hold it for more than 2 years and above. LTCG of 12.5% there. We feel that there could be some allocation between an income plus as a category, which is available from a large asset house, fund house. It's income plus arbitrage as a category. Then there is hybrids, which you can't miss. Clearly, I think some of the category in hybrids, such as the BAF, as a category is looking interesting in these times and for retirement from a long to a medium term perspective. And even a category called the arbitrage plus or the equity savings, which has a bit of equity thrown in to get you a better inflation adjusted returns as compared to a pure fixed income play. So I think that is something which may augur well.
Okay, Nasser, thank you so much for that detailed explanation there for the doubt that came in from Prakash. I beg your pardon. On that note, we're going to take a very short break, viewers. Don't go anywhere, because on the other side also we'll continue solving all the stock queries related to mutual funds with Nasser Salim, so don't go anywhere. Welcome back. Thanks for staying tuned into Mutual Fund Corner on CNBC-TV18. Let's move on and keep it going with all those queries that you all have sent for mutual fund. We have Nasser Salim, who's still here to solve the doubts. Nasser, let's move on to the next one. We have Deepak Joshi, who's writing to us from Karnataka. He says that his daughter wants to invest through SIPs and wants to know which funds can she pick to invest in. Starting out at a younger age, what is it that you would suggest? There's a lot of options that are there. Which is the best one right now?
Clearly, Vinny, I think for a young investor, our recommendation to Deepak Joshi is for a young investor, starting with SIPs and a diversified portfolio is the best mantra to start making and generating wealth. Typically leaning towards equity funds, and can be a good way to harness long-term growth. The specific choice of shortlisted funds also should consider risk tolerance and investment horizon. I think those are very key basics that we need to keep a check on. I think our assessment is that a combination of some large caps with some flexi cap options and some a bit of combination of index funds can also kind of help her engage in the market. Invest through SIPs in these funds. So we've given a mix of large and flexi cap funds. Our recommended lists are obviously top is the Nippon and ICICI and the large cap. And then there is in flexi cap, we feel the HDFC is our top choice. And on the index, we can look at any one of the index funds like the HDFC or the ICICI index funds as well, which are promising.
Okay, Nippon, ICICI, HDFC, Flexi are some of the names that I'm reading coming in from Nasser. Let's move on to the next query, and this is for a young investor, just saying, so clarifying that point as well. Let's move on to the next query for today. Joy Rohan, who is writing to us from Noida, wants to know whether one should do a monthly SIP, daily SIP, lump sum. I think this will differ according to the age group as well, and what we are planning to do in terms of your goals, Nasser?
Absolutely, Vinny. In the level of involvement and the age, I think those are both are very important in this to this question. I think monthly SIPs are the most common approach, as we all are aware of, offering a more balance between convenience and market exposure. When I say convenience, it's monthly in a particular day that goes in a month, and you know about them. Daily SIPs, on the other hand, may be more suitable for investors who are highly engaged and can closely monitor their portfolios. Though they can often incur high transaction costs, right? That's one thing that we need to be a little conversant to. The other thing is lump sum investments can be beneficial if you have a sizable amount to deploy during favorable market conditions and after consulting, obviously, your regulated professionals. I think the decision clearly, Vinny, in this case, should solely be guided by one's risk profile, in this case, Joy's risk profile, market outlook, and transaction cost considerations. I think those are broadly points that I would like to allude to.
Okay, let's move on to the next query. We have Aunitra Jha, who's writing to us from Mumbai. She says she's looking to create a corpus of 6 crores by 2038. Her portfolio is just 1 year old right now at almost no gains. Wants to know the guidance for the portfolio strategy, suggestions on mutual funds, and amount of distribution to achieve this target. How much should she be investing to achieve the target by 2038? Nasser, an interesting target, I think, is coming in from her as well. So what should she be doing?
Interesting number, an interesting target, Vinny, and we wish her all the best. I think so. 2 or 3 key points there, Vinny. One is that our current allocation across various represents a mix of large caps, mid and small cap, infrastructure and thematic exposures. Achieving a target corpus by 2038 will depend a lot on market performance. I must tell you, rebalancing and aligning her risk tolerance, with the end objectives. It might be useful to review and possibly streamline overlapping exposures, particularly in small cap categories that I can see, to avoid any concentration risk. Now, what we feel is that, again, the same names, clearly large cap, we could add about one-third, corpus, one-third in Flexi-cap, and in index also one-third. So there we feel that between the Nippon, HDFCs, and Parag Parikh in terms of Flexi-cap can be added to her portfolio. The other quick one is that, the index funds I just spoke to you about, whether it's the ICICI, Sensex, or the UTI Nifty 50 can also be looked at and can get to her desired number. The one point that I want to allude to here is, and to stick my neck out, is to say that her expectation long-term should not be more than 12% on equity returns. And based on that number, the corpus value in 2038, if she's looking at that number, the total monthly SIP required for a corpus of 6 crores today at 12% rate of return is 1,55,000. And therefore, the additional monthly SIP that is required for her to be doing is basically another 67,000. We've assumed that she's given a number of 10,56,000 as a current corpus value. So clearly, an additional amount of 67,000 in those category of funds that I just kind of shortlisted.
Okay, an interesting amount. Still more required if you want to reach your target over there. But let's move on to the next query. Prakash Desanur, who's writing to us from Jaipur, holding 1 crore rupees of mutual funds, most of which are currently in mid-cap. So obviously, that portfolio has seen a bit of a subduedness. And he's saying that he was making a profit of around 27 lakhs 4 months ago. Now, obviously, it's a different story. What is the way forward if you're holding a mid-cap fund right now, Nasser?
So clearly, mid-caps as a category have taken a hit over the past 6 months, with mid-cap 150 index correcting to almost as 18%, if I am correct, from its 52-week high, which was in September of 2024. Market fluctuations, my recommendation to him is, and to the viewers, is market fluctuations are common, and short-term declines may not necessarily impact the long-term outcomes if the fundamentals remain strong, which is what we are saying consistently. Before making any changes, consider whether the mid-cap exposure still fits his portfolio with his long-term objectives. If so, a more prudent decision would be right to hold through the volatility and drawdown through the long term, especially since the sector has already experienced a healthy correction. So don't get dissuaded because of the correction. This is part of the cycle. Equity as an asset class tends to behave like this, and in the longer term, because you have a long-term horizon, the current strategy that you're holding in should fit into the overall perspective. You should not be overexposed to mid-cap as a category. And for that, I think that is where you need to consult a more detailed approach to a certified person.
Okay. Nasser, the next query, Manthan Shah is writing to us from Mumbai, says that currently he's investing in mid and small cap funds, again similar to that. Should he start increasing the SIP? That's also a question, since you were talking about mid and small cap. Should one actually start increasing the SIP amount in good funds?
So clearly, SIP is the best tool to achieve cost of averaging. If you invested in small and mid caps, you can continue those, but what we're suggesting is, again, do a full-fledged review on large, mid, and small. If you've not captured as a category in large, please get into large cap as a category today. The valuations are far more favorable, and SIPs should definitely continue for the longer term. As long as you have full idea that you've not been overexposed to a particular market cap and you're well diversified within the portfolio.
Okay. Nasser, we have this last one. Nikhil is writing to us from Gujarat, wants to invest in multi or flexi cap funds for the long term from an ETF account. Does this make sense? A quick one on this.
So flexi cap as a category, we feel could vote better in terms of your end objectives because they have the flexibility to move between market caps and offers more volatility in terms of better returns. Also, in your term, could be volatile, but in the medium to long term, has always better risk-adjusted return. So as long as you are, you've done your risk tolerance measure, you had that discussion with your financial advisor, distributor, you may continue to do so.
Okay, Nasser, thank you so much, for joining in with us on the show, solving all those mutual fund related doubts from our viewers. We still have a whole host of them. I think we'll have to reconnect at some point of time again. But thank you so much, Nasser, and thank you so much, viewers, for sending us all those queries of yours. Hope we have managed to answer as many as we can. On that note, it's a goodbye from myself as well as the team who put this show together. Don't go anywhere. You have closing bell up next.